Hello everyone, this is Juan Sarmiento and today is Friday, November the 4th. Okay, I have selected 4 potential candidates. Let's first go through our current positions and see if we need to change anything. Starting with Caterpillar, moving very strongly today up despite the pullback since the opening, since the high. Let's see what we have here. Okay, this is a fairly recent entry. We have the shorts are expiring December the 9th and the longs February the 17th. So far we had made $700. We can always look at the account statement and see when was this entered if you want to. Go back enough days, let's say 100 days, well, let's say 30 days. I'm sure it's less than that. There. And Caterpillar, you enter the symbol here and then you see when you filled that order and was on the 28th, so it's exactly a week ago. So that is looking good for such a short time. We have so far almost $700 profit. Let's look at the chart again. It's moved very strongly. Look at what happens when you enter on earnings and the stock keeps on going higher. Look at the chart. Okay, after earnings the volatility drops, you enter the trade, and then volatility tends to go up from there. Okay, I don't need to change anything. Let's move on to Disney. Okay, this one we have changed, November the 4th, and that is today, 120 put. So that if we let it go like that, it will expire, but then we get assigned 400 shares, and 400 shares of a put are long shares, so you can obviously you can roll it over, you can sell it. Let's suppose we roll it over, analyze rolling. And we go 1 week further. That's all we can go, because otherwise we will be closing the put. So you can do that, or you can simply analyze rolling or duplicate that. Let's analyze the duplicate here and change from November to the 11th to 18th, and that is, we're essentially closing the puts here that are long. So we have short puts, and the 95 is where it's worth something. So yeah, I want to close that. Okay, right now it's not doing anything. And suppose the stock jump back to 120, then it's very unlikely. So I'm just going to close that. Okay, but these 2 puts at 95, yeah, they're out of the money, but if the stock continues to drop, it might make us some money. Look at that. Earnings are coming up, so, well, you might leave it as a lottery ticket. Okay, so this put, 2 puts might be worth something. The 120 call is probably worth nothing. 17 points, 17 cents, which multiplied by 800 becomes $136. Okay, let's sell that. Okay, and filled. The put is a little more complicated. The put calendar is a little more complicated, but the 95 puts, let's see if we were to close this. Yeah, $256, and this stock is dropping, but earnings are coming up, and so you can have a strong bounce on the 8th or the day after. It says here that it's reporting after the market close, so it will be on the 9th. Okay, let me see what we have for Disney. Do I really want to leave that as a, yeah, it could be, it's $2.58. Okay, so if we close that right now, analyze closing, analyze trade. Now let's say create duplicate. That's what we're going to do, and sell it for 259, and that's $518. So I could leave $518 as a put there in case the stock collapses after earnings. Okay, well, maybe not. So I'm not one for taking risk. It's a lottery ticket. What is going to happen after earnings, who knows? So I'm just going to close, get out of there. And so now we just have the puts to close. Okay, if you want to leave this alone, then on Monday, you see you have 4 and 4. You simply exercise those shares. Exercising this option would make sell 400 shares, which will be long on Monday. So you could close that way if it doesn't close now. Okay, so let's see, I'm saying a credit of $7. If you exercise, those $7.07 will be gone. That would be meaningless. So let's see if it feels like that. And let's move on to JP Morgan. I think this is another that got filled last week. JP Morgan. Let's say current positions. Okay. Right. So this is it now. So far it's so good. It's doing well. Okay, JP Morgan. I'm not going to change anything on it. But look at that. It's moving strongly higher. Good. Okay. You would remember there was a position that I was trying to fill, and it just never got filled. I think it was Goldman Sachs. How do I figure that out? Let's go back 7 days. Remove the JP Morgan thing here and see order history. Let's say not 7 but 10. Okay, and you can see, yeah, it was Goldman Sachs, as you can say, expire. I tried, we got Caterpillar filled, Disney filled, but nothing with Goldman Sachs. I tried several different ways and it just didn't fill. Okay, how about if we try again? Let's look at it. Okay, this will be the position now. We would have made some money, obviously. Okay, so 35, that's a high. Okay, you could raise it to the strike price of 350. Okay, let's start with that, okay? Goldman Sachs. Goldman Sachs. It's been rallying very strongly, okay? So, all right, so 8093, that amounts to $8,000, which is certainly within the 10% range of my account. We have the volatility. We'll calculate the volatility here. Essentially, the average of the back month options. The volatility is right here. It says VOL. Okay, you average those. It will be like 32, and then 29 and 28. That short front month. Okay, so let's get the calculator here so you can see what I'm doing. And focus here on the paper. Let's clear that, and let's start with 34.28 plus 28.4. Okay, you focus on these numbers here, here at the bottom, and divide that by 2. That's 31.34. Okay, and then we average those two at the bottom. 28.92 plus 28.24 divided by 2 is 28.58. So minus 31.34. Difference is less than 3%. So, okay, that could be done. Okay, it's not that bad. Another thing we need to consider is the volatility, the liquidity. So when you create duplicate order, you see mid and natural. Let's get the calculator again. So subtract 82.35 minus 80.8, difference is 1.55, divide that by 82.15, and that is times 100 is 1.88. Okay, so it's 1%, so it's liquid enough. If that was like something like more than 5% or something like that, we wouldn't trade it. But this means it's liquid enough, so it will be easy to get in and get out. The last week, notwithstanding, it didn't fill. Okay, so look at the earnings also. They beat expectation by a wide margin, so let's calculate that again. Let's see, what was it? 8.25 versus 7.47. 7.47 minus 8.25, the difference is is 0.78. Divide that by 8.25. Oh, the calendar on Disney filled. Okay, so we're empty on that. Is almost 10%. Okay, 10% earnings beat is what we want. Okay, that's very close, so I'm not gonna be too fussy about it. So that earnings, it was a good beat. The stock has rallied since. Now it's making a double top here. What that means is if the stock happens to go strongly above that line, the previous high, it will bode well for a big move up. But it may be forming a bearish double top here, and the stock could go to new lows. So in either case, it's a good candidate for a Gini trade. Okay, so why? Because it could move strongly in either direction. I don't use the technical analysis to drive my trading. I'm just saying that that's an observation that I make because I have plenty of experience with technical analysis, and I just said what I said. Take it for what it's worth. Okay, so $8,000 is good enough. It's about less than 10% of my account, so it works. So I'm going to send that off and see if it gets filled. Okay, good enough. I have other candidates. Let's go to the candidates here. Disney has disappeared. Okay, so Disney is closed. And you want to see what Disney did for us? Just click here. And you would see that, well, for the year, we lost $276. Big deal. I have positions here that made me $4,000, $5,000, $2,000. So overall, for the year, we're still way ahead with $12,400 of profits. Yeah, it's been sort of like that all year long, up and down around $104,000 in the account. But remember, we started with 50,000, so I'm happy. Okay, could be happier, but okay. Let's move on to our trades. Let's say personal favorite candidates for today. Let's start with T-Mobile. Okay, you can see same thing, jumped on earnings. The earnings were actually less than expected, so that's not that good. But why would it jump to new highs? And that's very strongly, and meanwhile the volatility has dropped to 28. Why did it jump so highly? Well, you need to go to the day of the earnings, which was here on the 27th of October, and go over here and look what did they report. Did they report better than expected? Guys, the outlooks improves, that kind of thing. You need to see, well, that got filled, the Goldman Sachs. Okay, so it says here, look for the numbers, okay? They say here they missed expectations, so it doesn't say when, then how come it's higher? It says here that the company reported postpaid net customer addition of 1.6 million and raised its 2022 core adjusted EBITDA outlook. Okay, that's the kind of thing that you want to hear. I keep clicking on there and I don't want to. Okay, and then raise of expectations, that doesn't matter. And what the other people do, but we want some explanation for the earnings beat. Okay, it says earnings per share beat, but that's not what we see here. So anyway, what matters to me is the move, and that there is a reason for it. Okay, so you can back that up. And the volatility has dropped. Okay, let's take a look. If we enter a trade, and we are going to enter my February options because it's 105 days to that expiration. Okay, and January will be 77. That's too short. We want 90 days or more. That's sort of what, back when I started doing this, I decided, okay, let's do 90 days. And I stuck with it so far, and I have no reason to change it. Okay, so buy custom, and it's a Gini. And let's say analyze that. And here we have 32.26. Yeah, it's sort of maybe not. February is the expiration, December the 16th. Can we do it any earlier? Yeah, December the 2nd, that's a month from now. Sounds good. Okay. Unlock it, and that's your new trade. Okay, so calculate the volatility again. We have 32 plus 26. Divide that by 2. 29 is the average. 27 plus 24.5 divided by 2, 25 minus 29, that's more than 3. So what happened with that is that, well, that's not quite so good, because we want to sell expensive options and buy cheap ones, and this is the opposite. But if it is less than 3%, I accept that, but not more than 3%. And in this case, it was a little more than that. So we can leave it and see if next week, if we are so inclined, we might re-enter that trade. But for now, that is too much. There are other positions that might be better in the volatility. And also take a look while we're here, create duplicate order and see the difference between mid and natural, which is 28.85 minus 28.18, and divide that by 28.85, and that gives you 2%. So it is liquid enough. It's just that I don't, and the stock has jumped. The earnings, the reason for the jump is questionable. Okay, if we are really, really keen, we leave it for next week, but I'm not too impressed. Not too much anyway. Okay, let's say Gilead here. Gilead, very nice jump. Look at the stock was in a sort of trading range and suddenly bounces up. And they definitely beat expectations, 1.4 versus 1.9. Okay, so 1.4 minus 1.9 divided by 1.9, and that's 26%. Okay, 26% is way big. Okay, that's the kind of thing I want to trade, get excited about. Volatility is sort of very tight range here, no, not at the bottom range. If you want to see what the volatility is, you can say Gilead here, go to the trade tab and scroll down, and you see here that it says current IV percentile 31%. That's a little on the high end, but I'm willing to forego this if everything else works out. The earnings are very motivating for me because they beat by a very wide margin. So let's go over here and look for February options, 105 days. The strike price should be 80, which is very close to the stock price. Analyze buy, and let's say analyze trade. Let's go to the trade tab. That's where we see the right template. Buy custom, Genie. Analyze trade. Yeah. Take a look at the risk graph. Okay, that's 1200. So create duplicate. I'm just checking here, and we could do up to, let's say, 9 of these. What do I mean by that? You'll see in a minute. Okay, so let's confirm other things. 28, 23, okay, let's do the calculator again. First, the back month options, 28.89 plus 22.99, divide that by 2. That's 25.95, okay? And that seems like it's right on the range of the front month options. You can do let's do the earlier options. That's 21 is a little low. Let's see if we go to December the 9th. Let's go to the calculator again. The front month 26.4052 plus 21.46, divide that by 2, and that's 23.99 minus 25.94 is less than 2%, so that's acceptable. So we could enter that trade on the basis of the options. Again, the back month options should be lower volatility, but that's pretty hard to come by, practically impossible. Okay, so I'm willing to accept a difference of 3% against me, okay, because the options on the front month will be lower priced if the volatility is lower, but not by much, so I accept that. Okay, so now we create this trade, and you see the difference between the mid and the natural is we calculate 13.62 minus 13.03 and divide that by 13.6 is 4. That's sort of high. Okay, you can change the option, see if that changes anything. Yeah, that's better, 3%. What I did was I changed the options, the front month options to December, and that's not ideal, but it's okay. See, we can say that those options, December 16th, that's 42 days to expiration. 35 is better, and 2 will be a little less than ideal as well because it's 28. 30 is the ideal. Okay, let's try this out, and looks like the options would be better spread that way. Okay, so now we have $13 times 100 times 100 is 1,300, and that's, we can do several of them. So let's create duplicate order, confirm and send, multiple. The reason I say multiple is because that way it shows me how many in quantity. Okay, this is the count ending in 15, so I'm going to increase this until it reaches 104. That is it. 8 of them will give me 10,376, which is about 10% of my account. So let's send that off. Okay, that was Gilead. LMT as Lockheed Martin. Again, big jump, nice volatility, slow earnings, beat expectations, not by a wide margin at all. 6.71 minus 6.58 is about what you expected. Divide that by 6.58, that's times 100, that's 1.9%. That's not impressive, but the move nevertheless is dramatic. Went to a new high. You can look at the earnings reports on the 18th of October. Just click on here on news and see if there is anything. Price target raised. I'm looking again for a reason for them to be jumping so much. Nothing. I don't see any reason for the big move, which is surprising. Oh, this does. 12.8 million contract from US Defense Advanced Research Project Agency. Oh, look at that. 581 million modification count. So that's going to cause the jump for sure. Okay, but that's more recent. Okay, let's see if we're going to trade this, if everything else matches. Start with the options we're buying will be the March options, and the strike price 475. That's probably going to be too expensive for us for this account, and that might be a done deal. Yeah, that's $10,000, which is within our range. Okay, let's look at the volatility. 29, 23, 51. Okay. start with the back-month options, 29.55. That's the volatility. Again, look at it here at the bottom right corner of your screen. 29.55 plus 23.81. Divide that by 2 is 26.68, and then 25.53 plus 21.94. Divide that by 2, and the difference is what? 23.53 minus 25.53 is less than 3%. Less than 3, so yeah, that's acceptable. Let's create the duplicate order, and then we can see that that's going to be also quite acceptable. The difference between mid and natural, 101.8 minus 100.3 is 1.5 divided by 101.7, and that's times 100 is 1.4, less than 3%. That's acceptable to me too. The volatility, you can check the historical volatility, current IV percentile 32%, that's a little high as well. And I'm putting up with that because I'm motivated to enter this trade. Confirm and send. All right, and so we have covered what I had in mind, pretty much. Okay. So I had in mind T-Mobile, Gilead, LMT, and GS. And I excluded T-Mobile. Okay, so now I would adjust this pricing. So far, my pricing is larger than the mark, so I'm not going to change it. But before the end of today, I will try to make sure to include those. If not, I will let you know next week, I guess, that whether I did enter or not. And you would have that difficulty if you were trying to do this in a paper trading account or in your own account. You will find it difficult to enter, then you'll find out. You might have no difficulty at all to do this in real life, in real accounts. That was the LMT, perfect. And here Gilead is a little higher the price than the mark, so it should fill. I don't understand why it's not. Sometimes that happens. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.